following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the Options Insider Radio Network. We have the usual cast of characters joining us today, starting off, beaming it all the way from the great state of Maine, where he's still devouring the last of his kids' Halloween candy. Good old Andrew Giovinazzi from OptionPit.com. Andrew, welcome back to the show, sir.
Good. I'm just finishing. Thank you. I'm just finishing chomping on my chocolate-covered lobsters right now.
That's a Maine delicacy, is it?
It is. It's a little crunchy though. It can be a little crunchy, I have to say. I don't have that Daryl Hannah ability to eat lobster whole out of the sea.
Yeah, crustaceans and chocolate to me, I don't know, not my thing. But you Mainers, you're a different breed.
Yes, the chocolate shop in town here does have full like lobster plates, and everything on it's made of chocolate, like the little lemon wedge is chocolate and the lobster's chocolate, and it's kind of catchy actually. It would fool you. It would fool you till you bit into it.
Let me ask you: Do you prefer Mainer or maybe like Maniac? What do you prefer to go by?
I think Mainer is probably the preferred Maine term.
That's the PC term.
Yes, but then there are definitely Maniacs, without question.
Those folks who really live out there in the sticks with the outhouse and the axe.
I lived here for about 7 years, so I'm neither. I'm just a new person.
You're still an interloper to them.
The Mainers just consider me a non-person, actually.
Yeah, you don't have the you can't call it a drawl. I'm not sure what you call it up there, but the Maine dialect hasn't really sunk in yet. Kind of half Northeast, half Canada.
It is a funky one. I can impersonate it like, you can't get there from here, so you got to go back a piece and go 2 ticks to the right.
There we go. We just offended the 3 listeners we have in Maine outside of your immediate family.
Well, one of them's me. So
there we go. Only 2.
The audience is still there.
We're only down 2. And joining us as well from much closer to home, a good old Alex Jacobson, a.k.a. the Viceroy, from Options Express. Alex, welcome back to the program, sir.
Hey, good to be here, Mark, and pretty much a quiet day in the market. Kind of everybody's waiting and watching.
Yeah, a lot of that going around these days. And speaking of going around, we'll be joined a little bit later by good old Uncle Mike Tusaw. Busy man over there at RCM Asset Management these days. A lot of clients to take care of. A lot of needy clients calling in right when we're doing the show. Don't they know he is a busy, busy man. He has other obligations. But being the devoted fellow that he is, he tends to the clients. And we keep rolling along with the show right on into the trading block.
The trading block.
All right, everybody, welcome to the Trading Block. This is, of course, the portion of the show where we break down the interesting news and developments and trends going on in the old markets. And it was indeed mostly a general, slow, gentle drift to the upside today across most of the major indices. S&P and NASDAQ closing up nearly 0.5% on the day. Dow, a bit of a laggard, down about up about a quarter of a point on the day. And the good old meaningless abstract VIX cash ticking down about a third of a point to 12.93. But before we go any farther, I know a lot of you have been writing in, a lot of you are champing at the bit to find out what's going on with Twitter, what do we do with Twitter, how can we get our hands on Twitter options. Well, I'm pleased to announce that there is an official date. We didn't know. We were kind of going back and forth on the last show to see what the official date, but we heard it coming out of some exchanges this morning. Looks like November 15th is the official day that Twitter will become optionable. So all of you guys writing in and tweeting in and asking, hey, what can I do with Twitter? What can I get my hands on Twitter options? There you go, Nov 15th. Let me pull up my calendar here. That is indeed next Friday. So you got about almost 2 weeks. So on that Friday, you'll be able to sink your teeth into Twitter. Is that pretty much the message you guys are getting over at OX there as well, Alex?
Yeah, but keep in mind, not to disappoint anybody, it's a conditional date. There's an actual certification process, and it sounds like Twitter is going to go to institutions, and there isn't going to be much retail distribution. And if it goes to too few, then it doesn't get certified, and the date may have to drop. I forget the rule. I think it was 500 non-related holders. So if it's not in enough hands, it doesn't get certified by OCC, but hopefully that won't be the case.
Alex, I'm going to start changing your nickname from the Viceroy to the Wet Blanket, because you just throw cold water on everything we talk about here on the show.
To the option geek dork. Yeah.
Actually, I'm looking at the release that came out of the ISE this morning. They say they're going to be trading on the 15th. That date is contingent on successful completion, of course, of the IPO, with shares that are going to begin trading on Thursday, November 7th. And, of course, that feeds into all the other specifications that Alex just mentioned. So if it makes it through all those hurdles, which, as we've seen in recent IPOs, are not insubstantial, then we should be able to get our hands on Twitter options on the 15th. So all of you who wrote in saying, I want to buy Twitter upside calls, if you can hang out for a week and let the IPO dust settle, that's actually probably a good thing when you think about it for a lot of our listeners who are so eager to dive in. They're forced to wait a week. Might not be a bad thing. You can kind of see where the IPO shakes out. You can see where the price is kind of settling, what the momentum is, and kind of let it go from there. You don't want to be the guy catching the fallen knife, let's say on Facebook or other ones that immediately turn to the dark side not too far later. So maybe that forced mandatory waiting period for options traders, not exactly a bad thing.
Yeah, from the wet blanket, 2,000 stockholders to qualify for listing. So I think that's going to be the tough one there. I think everything else is a layup.
Are they going to issue 2,000 shares? I figure they're not going to do what Facebook did.
One for each of you.
2,000 shares, one to every institution.
One to each of you.
Let them bid it up in the aftermarket.
I love that plan. They should do that. That's the Giovinazzi IPO rollout plan. I like it.
Exactly. Guaranteed for success.
Here's your share, Goldman. Here's your share, Morgan. One per, please. No more, no less.
Share of stock. If
you get two, you're going to totally screw up our valuation. Have a lot of your clients been beating on the drum for Twitter as well over there, Andrew?
We're waiting. Normally, we like you just said, waiting a little while to see what shakes out there. I mean, if you want to go buy Twitter, go buy Twitter. But I think better to wait to see how things shake out. Where things get priced, because this is going to be a tighter, it is a tighter secondary, right? It's nowhere near the size of Facebook's as far as what they're trying to raise, like $1 billion or something.
Yeah, it's much tighter in that sense.
So, I mean, that is generally more prone to upside shocks, historically, for sure, pretty much. So, if you want to jump in, it probably is going higher. But that being my big prediction, you all know what that's worth, about nothing. So. But generally, a tighter allocation when they sell stock is kind of that's potential for launch for the underlying. So, but I would wait, just wait.
Well, they're going to make us wait, so it's probably not a bad thing. Aside from Twitter, Sturm and Drang, what else is lighting up the old tape over there at Option Pit? What was catching your eye today on the Pit Report or just in today's activity?
Just low volatility. VIX is under 13 finally. We've been waiting, actually. If you look at a chart of VIX cash, well, the market's been kind of doing this upward trend here over the last couple of weeks. For strong rally over the last couple of weeks, except for the last few days, it's just been kind of pittering around. Talk about a wet blanket. But VIX actually had closed below 13 for the first time in a while. The vol products like VXX and stuff, all-time lows. So, it's certainly not a juice seller's market right now. I would say that. It's just there's not a lot of like longer-term skew is really inexpensive. There's not a lot of demand for there's just not a lot of demand for protection. But on the flip side, I don't think there's a ton of sellers. It's mostly just the bids are kind of going away. So there's a difference when some of these people are coming in and just selling every put bid they can find because we're going higher. This is more just there's not a huge amount of liquidity, I think, in some of this stuff. And the bids from the liquidity providers are starting to just ratchet down because they don't have to bid it up. They're not going to. So it's kind of one of those sort of wait and see kind of markets.
Speaking of wait and see, there's been a lot of pretty much that's all you can really do out in there. Some of these exchange names lately. Cboe has had a good run of late, but they had earnings on Friday, and they were pretty much, like I like to say here on the show, a resounding meh. They announced, they were trading around, I think, the low 50, 51 range and closing today $49.70. So not exactly a ton of movement. Some people were maybe expecting them to come off a little bit of the high end of that range, but that didn't really happen. So I guess if you're a Cboe bull, that's good news for you. CME also coming out this morning as well before the open. Another one not exactly lighting up the tape from either a vol or just an underlying movement gamma/delta perspective. I believe, it was closed at about 75 on Friday. That 75 straddle went out at about $3, which closed today $73.77. So well within that $3 range again. So a lot of it's like the premium sellers coming out on top there on the exchange front. You guys, I talked about Cboe in the past. In fact, given this context, I think it's interesting talking about Twitter, because as I recall, when Cboe went public a couple years ago, they were a very delayed optionable date from, as I recall. I think it was about a month that you couldn't trade options on the name, which I think at the time seemed a little ironic given the Cboe's bread and butter business. But a lot of people, I think, were left holding the bag for a while. They couldn't really buy options, and that stock was dropping quite a bit. Kind of pulled the Facebook, went up and then right back down post IPO. And I'll have to check that date, but I'm pretty sure it was a little while, at least a few weeks before you could buy options on that. So at the very least, Twitter coming out a week later. Not the worst news you could possibly hear. Alex or Andrew, you guys watching the exchanges at all? I know Cboe, like I said, has had quite a run of late. CME not as aggressive, but still doing pretty well. You guys watching those, playing them into earnings at all? Any of your free gamma plays in the exchanges, Andrew?
I didn't look, mostly because the Cboe doesn't tend to move very much, and I haven't really looked at CME. So, and again, the last free gamma one we traded was Microsoft, which, that ended up okay. But I didn't look, at least I didn't look at those two. You need a stock that moves a little bit to usually make those really pay. And those two are kind of been sort of duddy lately. CME used to be a mover, and it's not as much anymore.
Yeah, I guess the free gamma doesn't really pay off that well when there is not much gamma to be spoken of for free or not.
When there's not much gamma to gamma.
Yeah,
exactly.
You can't gamma the gamma, not much interest. Well, Cboe has had some upside movement, so that might have been interesting over the last few months. But yeah, at least last few sessions, kind of flipping the script a little bit too. We were joking on one of our recent shows, obviously, that the free gamma going into the earnings wasn't actually the play. The play has actually been holding that gamma through earnings lately, because a lot of names like Google and other have really been dramatically surprising post-earnings and paying off well in that sense. These names, the exchange names, kind of coming in on the other side of that coin and saying, maybe you get out before the event, or you sell and carry it through and you do all right. So yeah, they're kind of playing the other side of that narrative. So everyone that was lining up to buy gamma and to buy vol post Google, that didn't really work out in Apple, and now it didn't work out here that well in the exchanges. So it's been an interesting kind of mixed earnings season so far.
Yeah, Apple, for an earnings point of view, is just they're just a giant. And I'm not going to say it's a monopoly, but I feel like it's kind of the phone company. It's a utility. They have nice products and they sell a lot of them, and they're going to make a lot of money because they're highly profitable. But until we have some of that, until they, basically go in and kill another category, you're not going to get the same sort of upside we had before. That's sort of where Apple is.
Speaking of which, they're almost exactly unched from where they were at earnings. So not a bad premium sale. Of course, a lot of our listeners writing in lamenting that all that move occurred in the after hours and then it opened unched. But the premium sellers in our audience, I'm sure, not too upset with that. If you did all right, if you stuck to your guns and held your shorts here in Apple, even a couple of days later, you're still doing all right. Pretty much, I think it's like $3 away. $5.26 it closed at today, $526.75. So interesting developments. I never would have said that a few months back or a few quarters back that Apple would be. I would never imagine it to be a few handles away from where it announced a few days later. Usually, it's always been an aggressive mover. Not so much of late. I guess they waited till everyone was loading up on the vol and then said, you know what, we're going to sit here.
It's funny. I wonder if you did a study on prospects for growth, like a Google or Priceline or something like that, where there's still like very high growth expectations, or there could be huge growth disappointments. Those have been tending to move, and then you get a company like Apple, where the growth story is slowed down to some degree, even though they sell a lot of stuff. But then you have a company like Microsoft who could be growing again, which is why we started seeing more volatility after. I wonder if you could look at some kind of, algorithmic or anecdotal evidence on, companies that have better potential to move sort of based on business and things like that. The more I think about it, the more there's probably something there, but I have to think about it a little bit harder.
Just factor in that iWatch premium and pretty much it all makes sense.
And Samsung already came out with it.
Yeah, the Gear. I'm a big iWatch fan or smartwatch fan. Even I am not too enthused about the Gear. It's a massive, clunky thing with a camera in the wristband, and a pretty garbage camera from what it seems like on the surface. So I don't know if I really need a $400 device just to have a garbagey camera on my wristband.
It's funny. Maybe Apple just said they spent, let's say, okay, we're going to spend $10,000
just to get everybody doing it.
Samsung to waste the money on a stupid iWatch, and we'll just let them spend all the resources there. And then we're going to go invent something over here. I mean, kind of like Patton on D-Day.
Yeah.
Patton's going to lead the charge.
Exactly.
They change it all around.
Keep an eye on that Patton guy. You never know what he's going to be up to. He's crazy. And he likes iWatches. And then bam, right through Normandy. That's exactly. This is totally a Normandy play right here. I kind of had that sense myself as well. They're kind of laughing as all their competitors are spending a ton to beat them to market. On
a watch nobody wants.
I don't know. I'll be an audience of one for that one. I really want a good smartwatch. Whenever I put on an old analog watch, it just feels to me like I'm doing something from like the 60s. It just feels like such a wasted space on my arm that could be put to so much better use from a technological perspective besides a bunch of just spinning gears telling me the time, which seems kind of antiquated in this day and age. So I'm definitely in that market. I just haven't seen the thing that really appeals to me yet.
To Andrew's point, Apple is the IBM of the 80s and 90s. It was pretty much a public utility. It dropped out of the growth category. And, at one point, IBM was the American stock you had to own. In fact, through the 87 market break, through the 87 crash, IBM was 20% of the market cap in the United States. It was over 20% of the OEX, and it was about 20% of the S&P, which was problematic for a number of reasons. But if you look at IBM today and you think about it, you say, well, they're in services, and I'm not really sure what they do. And to Andrew's point, the kind of public utility analogy, they make a lot of money, they got a lot of cash, they do things right. But Apple, is going to need something to pull it out of that category, or it becomes relegated right back to IBM.
All right, and on that note, as if he was invoked by the gods of Cupertino, good old Uncle Mike Tusaw, now joining us. Alex was just giving us a long, detailed discussion of Apple. What's going on in Apple realm? How goes your 1/7 by 3.2 ratio time diagonal spread?
You kind of oversimplified it the way you described it, quite frankly. No, with that, I closed out of I'll just kind of give you an update with everything that we've been doing on it. And with that, I'm actually going to have to get the old spreadsheet out to give you the update of what we've been doing since last Thursday. That's how active it's been. With it, what's been very appealing, I think on Thursday when we spoke last, or when I was on last, I was in a 5-10 calendar spread. And I exited that on Friday, I see. And we ended up with a profit of, we got our, got a little bit of a profit on it. I think normally we're looking to get approximately $100 profit per contract, and we got about $85 per contract. And then then over the weekend, I got into a 490-500 bull put spread. And over the weekend, a lot of the vol got crushed on that. I felt that vol was a little bit higher on Friday, and then got into a credit spread on Friday, just a traditional 1-by-1 credit spread. And once again, this is along with the long stock and the long put. Got out of that this morning. I didn't really want to get out of it that soon, but we had a little bit of a pop in the stock. And so I got out of that one at 40, got in at $1.14, got out at 40 cents. And so as it stands right now, got into another calendar spread at the 510 level, long the November week 5 puts, so the November 29th expiration puts, and then short the November monthly puts. On that, we are in at a debit of approximately $360 per contract, but we're taking 1.5 times the normal size position on it, and we'll see where it goes.
I can't believe you dumped the put in stock. That was the most exciting part of the whole equation.
Oh no, we're still in the long stock.
Okay,
yeah,
okay.
we haven't left that.
You just dumped the put. Okay. The other most exciting part of the whole equation.
Yeah, we're still long stock. We're still long the April 460 put. That's been the same ever since. It's just these little 1 week finance plays to try and finance the cost of this long put, with Apple kind of remaining relatively range bound over the course of since earnings. It's even before earnings a little bit for that matter. It's been a lot of activity in the short-term premium selling world, that's for sure.
It's almost like they created this weekly strip just for you, Uncle Mike.
That's what I think it was.
Andrew, you must love this. This is like almost the definition of doing stuff.
Yeah, this is my favorite when he talks about, because he's using options in an intelligent way, which I know freaks people out sometimes, but it's probably worth it to listen to, because notice how he's not as worried where the underlying goes. He's like, the underlying goes here, I do this. The underlying goes there, I do that. And then I go have lunch, which is one of the ways, if you're going to spend money on an equity, is how you should, manage the options. And funny thing, we might actually have in the future some sort of webinar similar to the kind of things or the kind of doings that Mr. Tusaw is describing right in this very show.
There's only one flaw with what you said, Andrew. You said, and then I go have lunch. I haven't eaten in 2.5 years. I just don't do that. Okay.
Just a nice feeding tube at your desk?
Pretty much. That's just how it works.
You got somebody bringing you lunch, but you know what I mean.
Yes. They throw me raw meat when the market's over.
Exactly.
Let's talk about that for a minute, because about half the volume that's done in the options market by individual investors is precisely what you and Mike are talking about. It's some form of market neutral strategy, or what we affectionately refer to as harvesting premium. And to your point, Andrew, I mean, that there used to be we used to call it a biblical comment at SIBO, is why God created puts and calls. And the idea was to be able to create trades that would make money when nothing happened, which much of the time, statistically, 2/3 of the time, the market does nothing. And prior to the, listing of options, which are now 40 years old, what you used to be able to do when the market did nothing was watch. And that's what's so cool about options, is you can craft strategies where you don't need to be right about the stock. You just need not to be wrong about time, volatility, and even then, you can craft strategies which will make you money when the paint dries. And that's what's so extraordinarily cool about the options business, and that's really been the big growth in options post 2000 with electronic trading and multiple listing, and just a huge part of this business is people who come to the market every day with the expectation that nothing will happen and I'm going to make money from nothing happening.
I love it when nothing happens.
You're very much on the nothing side of the fence. Unfortunately, we still have a lot of something to go in this show, including the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block. This is, of course, the portion of the show where we break down the interesting and or the unusual options activity that's lighting up our collective tapes. If you'd like to play along, first off, don your fedora, go get it out of the closet, dust it off, put it on, and then surf on over to theoptionsinsider.com, where you could find the full text for this alert, as well as many others that we don't have time to get to on the old show today. Going to kick things off with a newcomer. It may sound like something you're familiar with, making a lot of headlines today, but it's not what we're talking about here. This is Berry, not BlackBerry, but BRY. This is Berry Petroleum Company. They closed today $51.72, up about $3 or 6% on the day. And that's off some news of some lingering corporate action here out in Berry. They are potentially in talks to be acquired by Line. And so, not surprisingly, we saw some call activity. This is the name that does, about 800 some odd contracts or so. They're doing about 2x that today. Pretty much all of that coming, or a good percentage of that coming in the Feb doubles, the Feb 55 calls, trading for, when we profiled it on the site this morning, we saw a block of 240 going up for a price of $3.20. Open interest of just 22 contracts, so that's clearly opening. As the day went along, that number increased. We closed with about 700 contracts going up on the Feb 55 strike. So that may not sound like a lot to you listeners, but in a name that only does a handful of contracts a day with a corporate action looming, 700 contracts on these Feb doubles, pretty interesting. It gives us some insight into what the potential time frame for this deal could be, as well as maybe what someone is betting on from a strike price perspective. So we like to dig into this stuff, particularly where some corporate action is concerned. What say you, Mr. Andrew? Potentially some insight here into the corporate dealings over here at Berry.
Well, yeah, I think this is definitely Fedora land, because everybody's like, well, Andrew, why do you care about 200 contracts? Well, this looks like where they announced a new merger, a pro rata ratio for swapping Berry shares for Linco shares, LINE shares. So this would look like a risk arb guy buying these Feb doubles in Berry and then selling the acquiring company's stock, because there's some short interest pressure on Linco. So, guys want to short Linco and buy Berry and do the risk arb because there's about 10% in the deal right now. So an easier way to do is you can buy calls in Berry and then short kind of a delta weighted amount of Linco. So that's sort of where this trade came from. And there's they're buying some back month calls. Basically because they think, Berry's going to be a higher price stock in the not too distant future. And I guess they have a walk away termination date for the deal now in January. So it looks like it's still going on. And, it could be interesting for somebody that's interested in a trade like that. Obviously, the risk arb stuff is not for, beginners, but there is definitely something there with what's going on in it right now.
Yeah, we're seeing more of this now, people using the options as one leg of these types of risk arb trades, either as just an easier, cheaper way to get deltas, or at some sort of, like I said, some sort of equivalency type trade. But yeah, it makes a lot of sense in a name like this, pretty thinly traded, to maybe come in and use the options as one leg of that, risk arb, very popular type of trade. I think we're going to start seeing even more of this as more of these houses that have been doing these types of trades for decades start to discover options. It's amazing so few of them already have, but more and more of them are. So this is maybe not the insider lurking, but really just someone like I said, taking both sides of the coin and hoping they squeeze together and you squeeze a little bit of juice out of that trade.
Little berry juice.
Yes, the berry juice. There we go. All right, next up we have AMCC. This is Applied Micro Circuits Corp. Closing today, pretty much unched, $11.41. I think actually exactly unched. Don't see that too often here. This is a name that does a whopping 300 some odd contracts a day, doing about 1,100 today, so nearly 4x their ADV. A lot of that, pretty much all of that, 1,000 of those contracts coming in one sizable trade on the Nove 10 strike. We saw a bunch of these going up, starting off with a 500 lot that we profiled on the site earlier in the morning. A Nove 10 calls being purchased for about $1.50, $1.55, followed up by another 500 lot a little bit later in the day. Total of 1,000. Prices, I think, a little bit similar in that second lot. Of course, interesting if you look at the open interest on these strikes. There's about 2,000 open on each of these strikes, which makes me think maybe someone did either a funky ratio or maybe a two-saw style stupid, and they're closing out one part of it. What do you think is cooking over here in AMCC, Mr. Andrew?
I think it kind of felt like they were kind of front-running the whole thing today. Like there's somebody who's buying calls and, because the stock was trading actually about 11.80 at one point. So they were about 30 cents in the money this morning. So it felt like, either front running, I'll see the open interest tomorrow, because I like following up on these when it looks right. But I don't think they closed them today. I thought this was just good old fashioned speculation. Now, it could be a short call, a call seller covering, but I kind of doubt that. You don't have really earnings out. So, what are they waiting for now to do that for? Nothing really added up to me except for that it could be somebody just sort of making a run on this stock going higher. But that's what I saw, because we had 91 of the puts trade and 100 of the calls. So not enough of a ratio to make things interesting. That's what I'd say there.
It's all interesting to me, Mr. Andrew. Speaking of interesting, we're going to move on to the next one. And not often that this occurs here on the Odd Block. You can actually do a one-for-one stock swap with our last name and then our next name. This is Marin Software, ticker symbol MRIN. They closed today at $11.40, so a whopping 1 penny cheaper than AMCC. So if you're into swapping some stocks, there you go. You can sell your AMCC, buy your MRIN, and save a penny. Don't often see that lining up that way in the old Odd Block. But what we saw today was pretty interesting. Looks like your standard size covered call trade. We saw this name again, not exactly lighting up the charts from a volume perspective, doing 93 contracts a day. So no volume to speak of at all here at MRIN. Doing 3,600 today. So that's some size. Some front month back and forth activity. The Nove 12 halves gone up about 400 times. But what caught our eye really was whopping 3,000 of the Dees 12 halves going up. We saw paper pretty much selling the bulk of those with zero open interest. That is all opening paper. For prices, it looks like around 40 cents, one block going up at 45 cents prior to the block as well. Either way, it looks like a pretty substantial covered call play. The guy's locking in about 4% for a month on that call. So that's not a bad level if you are a size underlying holder here. There are worse things to be doing. Of course, the level not that great. The vol has since ticked up a little bit in this name for him getting filled at 40 cents. Maybe his execution desk, he should talk to them a little bit, but otherwise, they went out 50 at 75 cents with the stock essentially unched on the day. So maybe the level not that great, but sometimes you got to trade through the markets to get all the size done, and this is a very illiquid name, so I can't hold it all against them.
This is all the open interest there is this trade, literally.
Yeah, he'll be trading with himself to get out, so there you got to take that into account too. Any desk is going to internalize this order, probably going to make them pay a little bit to do it. Seems like they did that today.
They did.
They're pocketing a good dime or so on this one, at least, if they can get out of some of it. But interesting trade. Yeah, not a bad covered call trade. I don't know if you guys saw it today, but Steve Sayers over in Barron's profiled some of these big covered call funds that have been out there and kind of lamenting the fact that a lot of them are underperforming And part of it being the fact that it's just better and cheaper to construct these things yourself and more efficient than having some fund do it for you and take a chunk of the profits, and on top of which they underperform the S&P. Doesn't seem like a great deal. Here's some guy taking that advice to heart, putting on a nice covered call, taking home, even with this garbage fill, and it is pretty garbage. Even with that garbage fill, still taking home about 4% or so on the trade. So that's not a bad deal overall.
No, not at all. And when he filled this, when this trade went up, the vol was down on the day a little bit too. So the market definitely had, it had to absorb it, and then, they sold enough calls, I guess, in the front to help balance it out a little bit.
Yeah, I guess so. They sold enough to be bid coming out for more.
Yeah,
you don't usually see that. We'll take down another 3,000 of these.
I have to say, because it was like 35.50 when the trade went up, and now they're like, nope, 50 bid.
Yeah, that's not something they faded that guy pretty hard. He needs to have a long. If you're listening to this show, whoever customer you are, you need to have a long chat with your execution desk, because they faded you hard and he bid on it. And
yes. Option Pit would be fine to do advisory on execution.
These things should not be bid up coming out with the stock unched. That really is a rubbing salt in the wound. That's amazing. Yeah, we'll take more at 50. What do you got?
I know he could have saved, for what he would have saved just buying some of our services. He would have saved himself a lot of money.
So there you go, listeners. If you haven't seen the value proposition yet, then that clearly makes the case for you. All right, we're going to finish things up with a little baby one, both in price and size. This is ValueVision Media, ticker symbol VVTV, closing today at $5.51, pretty much actually up about 6% on the day, so a little bit of a move. Name that does about 500 contracts a day, doing a whopping 700 today. Almost all of that coming in these Nove 5s we saw going up, people buying them for prices, it looks like around 40 cents, about 530 going up. Open interest is 1,600, so that could be taking off some of that. Obviously, we also see, looks like 200 going out way out in April, on the April 7.5, so maybe someone closing out some of the nearer term and then rolling on out to April. Is that your take as well there, Mr. Andrew?
It feels like that. That's what long story short, yes. The April's didn't go up till the second part of the day. Either way, though, I thought the timing was pretty good because they're already in the money. It didn't take very long for these little parity calls to be in the money. So, most likely closing, but you generally are closing this if you think something's going higher, and that's what this customer was looking to do. So. But yeah, it looks like they're rolling back out again. But again, not a whole. Some implied vol in this thing, but not a huge amount. Not a huge amount. 50 volatility in a $5 stock isn't much. So, but it has something to do with social media. I was looking at it's a multi-channel electronic retailer that markets, sells, and distributes products through TV, telephones, online, mobile, and social media. I have no idea even what that means, but it has social media in it, and since Twitter's coming out, that it's going to be a higher stock.
They're the as seen on TV guys. As seen on Facebook.
Seen on TV? Okay.
As seen on Facebook. I don't think that carries the same weight. All right, and with that, we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Express Block. This is usually the portion of the program where the Viceroy takes you guys on an in-depth tour behind the scenes of OX, but because he loves it so much, and because you guys love it so much, and he wants to play along himself, we're going to do another edition of our trading patterns guessing game, because it is such a fun game. I'll make it easier for you guys this time, because Alice is going to play along too. I'll throw it out to you. What underlying do you want to play for today? What's your choice? Dealer's choice, or perhaps player's choice? Tesla. You want Tesla? I thought you might say Tesla. Okay, that's pretty pretty apropos given the OX clientele and the fact that they're coming out tomorrow. And I would think you guys should be able to guess most of these. I would think, I haven't pulled it up yet, but I'm guessing myself that it's probably some of the retail heavy names may be weighing pretty heavy in there. I shall say no more. I see the answers now. Mr. Viceroy, we'll start with you because this was your idea. What is your pick for the number one correlated underlying for Facebook amongst OX clients?
The Russell ETF.
Wow, you went deep. I thought you were going to do one of the low-hanging fruit names, but you went deep. And unfortunately, you are not rewarded for your venture off the reservation, sir. That was impressive. I give you points for daring, but it doesn't land you in the top 10. I don't see it anywhere on here, sir. So, Uncle Mike, we'll try you. What is your take here on the number one underlying for Tesla, correlated underlying amongst OX customers?
Well, let's see. I'm going to take the easy way out. I'll go with Facebook.
See, that's what I was expecting. That is very much the easy way out, and that is the number one name. So you win. You win. I thought this one was going to be a slam dunk. That's why I was amazed when Alex went into the deep list there.
CTY.
What was that?
That would be my choice.
That's your choice, CTY?
SCTY.
Oh, Solar City.
It's on this other company.
Yes. Yeah. And that is a good pick as well. That is number 4. So you've picked number 1 is Facebook, number 4 is Solar City, and number nowhere is Russell. So, Mr. Alex, redeem yourself, sir. What is your next pick for the number 2 highly correlated underlying amongst OX customers?
Lulu.
Not a bad guess. Another a little bit, not as deep as the other one, but a little bit deeper than some may have guessed, and as opposed to the low-hanging fruit. Hint, hint. But that one, unfortunately, Lulu is not on the list as well. So Alex 0 for 2 on the name that he suggested. But taking a little bit, taking the path untaken sometimes. Taking the path unshred, so I give him points for daring. Uncle Mike, you're up next with number 2 for Facebook. Or I'm sorry, for Tesla.
All right. Well, I want to say Apple, but I'm going to try and go deep. And I'll go with GDX.
Wow, is that the ETF for what is that, for gold?
Gold miners.
Yeah.
Gold miners.
That also is deep, and unfortunately, you are not rewarded as well for your courage.
Well,
and
I already clinched number 1, so I had to go for it. You know,
you could swing for the fences now a little bit.
Yeah.
Andrew, see if you can get a little higher than number 4.
Oh, gotta go Apple.
Yeah, there you go. I laid it out there. Couldn't be any easier. Number 2, Apple. Most of the names on this list, if you guess Facebook and Apple, you're going to be in there somewhere.
How about Priceline? I mean, was that round out the top?
That does not actually. But not a bad guess. Not a bad guess. I will just say you hit number 4. So you got Facebook, Apple, then blank, then Solar City. Number 3, another name we've discussed on this program in the past. I will just leave it out at that. Alex, you're up next, sir.
I'm not doing well here. LinkedIn.
Ah, not bad. Number 6. There you go. You're on the board.
On the scorecard.
We should start keeping score as a running tally of this game to see how many names you guys get, and then B, what place they are on the list. So we can rank you accordingly.
Design this product.
he swears to me he's not logged in, and from his guesses so far, I'm guessing he's right.
Yeah, I mean, I could cheat, but no, actually, very talented product design person, Daryl Wagner, who we had on the show, designed the product.
Okay.
One more guess for each of you. Uncle Mike, what is the number 3 correlated underlying here for Tesla?
Google.
Oh, close. Surprisingly, not on the list.
Really?
Yeah, not on the list, at least from today. I'm assuming this is all pulled from today's activity, right, Alex? This is today's number.
Yeah.
So
Google is too real of a company.
Yeah,
they don't belong amongst those people.
Well, you know what it is? Google and Priceline have got expensive for retail.
Yeah, so they're in that premium thing, which markets them and advertises them as a premium stock, but also kind of prices them out of the range of a lot of their former traders. So it's kind of a bit of a catch-22 for them. Mr. Andrew.
Netflix.
Yeah, there you go. The Widowmaker, number 3. So Facebook, Apple, Netflix, Solar City, And I'll just read off the rest for you guys so you can see. You were close on number 5 there, Alex. It was the E-mini, the Dees E-mini. And then LinkedIn, number 6. Then number 7, Amazon. No one said Amazon. Number 8, XIV, the good old inverse VIX short-term ETF. And then number 9, Yelp. Number 10, JCPenney. So a lot of stalwarts there on the retail scene here for Tesla. Love it. Love playing the old guessing game. One of my favorite things to do here on the show. We'll have to bring it back on a more regular basis. I'm glad you suggested it today, Alex. All right, so that is going to do it for the old Xpress Block, and now we're going to roll right on into a quick mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, welcome to the mail block. This is, of course, the portion of the show where you guys get to sound off and chime in and join us here on the old All-Star panel. First up, we have a comment coming in from Options Curator, and he writes just a little comment letting us know what he's up to. He said, I just bought to open an Apple Feb14 515 call at $31.20. Let's see how Christmas holiday plays out. So there you go, Uncle Mike, someone who's jumping on the Apple train with you. Not exactly doing the 1 by 3.5 by 2.5 iron condor ratio swap, just buying the old, actually in the money calls now. Interesting play from that perspective. What's your take on this, Uncle Mike?
I mean, I could see a rally in Apple. I mean, I'm actually bullish on the market overall right now, but I think that the only thing I would consider doing different is I would even consider going a little bit closer to the money on it, because I think premium's relatively cheap right now. There's not a lot of Apple announcements coming out, but that specific month in strike I don't follow as close as I've been following the ones that I'm in right now. But I like Apple over the course of the next few months. I'm bullish on it. I'm bullish on the market overall. Just the only thing I would caution is maybe be prepared to sell a couple weeklies to make some adjustments to take on those theta monsters.
Yeah, this is an interesting one. This is not the typical, hey, I bought an out-of-the-money call on Apple, what do you think? This is actually a quasi-stock replacement type trade. He's buying, I think it's about 10 handles in the money. It's a $35 option right now, up about $3 today, and it's got about $26, $27 worth of juice on that strike. So it's expensive, but not as expensive as it has been, as we said in the past. Apple vol, not quite what it once was. An interesting trade. Mr. Andrew, what's your take on this one?
No, I like it, actually. I mean, it's 55 deltas if you want to buy Apple, and it's a heck of a lot cheaper than the stock. So
there you go.
You know, you could buy what? You could buy 100 shares of Apple, and it'll cost you $52,000, or you could buy one lot, and it's going to cost you $3,000. So.
The magic of options rear their ugly heads yet again. I like Uncle Mike. I like your suggestion too of that's going to have a little bit of theta on it, not as much as if you went pure out of the money and it just decays to zero, but you're still going to have some decay on that name, so it might be worthwhile investigating some of the things we've been talking about here on this show. Maybe writing some near-term weeklies against that and rolling that on a weekly bit just to take some of the sting off that. You know, you got $27 worth of premium in there built in. You want to take some of that sting off, and if you can do that in some sane ways, like we've discussed on the show in the past, it may be worth investigating it as opposed to just holding that in the money call and seeing what happens through Christmas. All right.
Yeah, can I add one thing to that, Mark?
Yeah.
If the other thing that I would do on that to the listener that sent in that email would be to just constantly monitor your position delta. And in the Options Express website, there's the positions page to where you can look at what your position Greeks are. And if you are going to sell some premium on it, when I'm doing a trade like that, if I'm buying a deep in the money option, it doesn't necessarily mean you have to do the math and think, okay, I'm going to sell another option so that way on expiration Friday, it's mathematically impossible for me to lose any time decay. You don't necessarily have to do that. All you need to do, or what I like to do, I guess I should say, is just monitor what my position Greeks are, and I like to get it to where my theta says 0, and you'll have to make adjustments on that from time to time, because if the market goes up or the market goes down, it's a six-way battle royal in there with the Greeks all fighting each other that will change from day to day. But the main thing that I like to do is try to keep the position theta around the 0 level if I'm doing a trade like that.
Got to do stuff like Andrew was saying, and here in the chat, and I like to say on the show many times, this is also a good candidate for something I've talked about a number of times on the show. Maybe not as long-term of an option as I would use usually for this, but we've talked about using in-the-money options as a surrogate for the covered call in the past. You could certainly take that approach here as well and leg into some very near-term diagonals with that, writing, let's say, the weeklies or even a monthly, nearer-term option, perhaps an out-of-the-money option, and then you have essentially a covered call scenario using this a little bit farther out in the money option instead, and saving a ton of money from a capital efficiency perspective instead of buying the stock and writing the call. So either way, an interesting trade. Options Curator, let us know how it works out for you. We'll probably keep an eye on it and see it ourselves. And good luck to you. Next up, we have another one from Mr. BillyMo. He writes in quite a bit, so I can't answer them all on one show, but we'll pepper him in every now and then when we have some time. Really quick here for this one. He writes, hey, second question, guys. Why doesn't SPY and its options trade the same hours as ES and their options? Seems like the exchanges would love it. I think we could spend about 3 days getting into the minutia of how these ETFs are listed in the futures and why at the different exchanges. Mr. Alex, you want to take a tilt at this one? It seems like it's right up your alley.
Only to start my my rant about staying open late. It's just expensive, and exchanges at some point are either going to have to stay open late or figure something else out. And as liquid as the SPY is, if I were going to stay open late, as BillyMo says, that would be my first choice. But this is back to the after hours, and we're not convincing anybody, it appears.
So, Mr. Andrew, what's your take here for Mr. BillyMo? BillyMo is what it is.
Yeah, I just think they're losing. The exchanges are losing some business to the option exchanges are losing some business to the CME, and eventually it's an all electronic market with, you don't need many people to mind the store anymore, but they've tried that in 2000 and they didn't do it. And so, I mean, in the biggest bull market in history, if they're not going to do it, but obviously there's a lot more people involved back then, but it would be nice to have some of these options open, let's say, for an extra hour. Now, even the problem with earnings and stuff like that is they still shut the underlying down anyway, and then the earnings come out and pop, So there's a little of each for each argument on that one. I'm ambivalent on it, to be honest.
Probably some of that, they should come to me type mentality too. They should adjust to our schedule. No, vice versa. So there's a lot of that kind of nonsense at work and these types of things. I think really the truth is everyone's just
puffery.
Yeah, exactly. Puffery. Everyone's just going to Jumbo SPY. That's what it is. That's stealing all the thunder. Jumbo SPY. All right, great questions, everybody. If you want to join them, of course, you can do it at theoptionsinsider.com or on Twitter, Facebook. A lot of great ways for you guys to reach us. Now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, those car horns mean that it is time for our final segment, Around the Block, where we look into the future, tell you what we're watching. A big one for us, and I know for you guys over at OX, Alex, clearly Tesla. That guy's a big name for a lot of your clients, and they're reporting after the bell tomorrow. So I would wager that Tesla will be high on the volume list over at OX tomorrow. Just a wild guess. Mr. Andrew, what are you watching for the rest of this week, sir?
You know what I'm watching? One of the bigger, well, at least for me, is we got low euro volatility and the ECB's meeting. Possibly they might do a QE because inflation's so low. And that's what it seems like. There's some speculation. I don't know what that does for the dollar, our markets, or anything, but Japanese have done it. We've done it. I would think the Europeans would jump on the bandwagon if they're not getting the kind of growth they want, considering they've had to cut spending so much over there. So I don't know how the cookie's going to crumble, but that's Thursday. We should hear something. Again, waiting for a giant, a big government agency to make an announcement to move the market. So interesting to see what happens there. That's my biggest, besides, the scattered, got Priceline coming out and Tesla and stuff like that.
All right. Thank you for that, Andrew. And Mr. Tusaw, what are you watching for the rest of this week, sir?
Bears-Packers tonight on Monday night, of course. But besides that, I kind of like this because of the fact that we don't have any Fed meetings this week, and this might be a nice boring week for me. It has the potential to be a very exciting boring week, and that's what I'd like. You're definitely in the boring week camp.
What's your call on Bears-Packers, Mike?
I think the Packers are going to trump them, but with my fantasy league team, I need a high-scoring game because I have 2 receivers on the Bears, and the guy I'm playing has the Bears defense. So I'm hoping it's like 55-51 or something like that.
Isn't it like 10 years the Bears haven't won?
Yeah, it's going to be tough, and especially without Cutler.
We need to figure out some way that we can combine fantasy football and options and make a show about that. I think that would be pretty popular.
Oh, I'd love it.
I don't know how it would work, or is there some way? Can you buy an option on a receiver if you want to add them to your team, maybe, or something like that? Or you want to add a little kicker to your season? Maybe that could be the way we could do it.
Man, if we could do that, the option fantasy football exchange. I'm a straddle. I'm long Green Bay. I'm short.
There you go. I think we have the makings of something really interesting here. I like it.
Cantor Fitz will have it up at the WID next week.
Yeah, you're right.
There we go.
They jump into all that weirdo stuff. Mr. Alex, what are you watching for the rest of this week?
Just 3 earnings: Tesla, Groupon, and Qualcomm. In terms of stuff that's got a lot of volume behind it, and like Mike, there isn't a lot of fundamental news coming out this week. Weeks like that sometimes scare me because those are the weeks you get the surprise. But in terms of what's on the calendar, relatively, the only important name is Tesla. Not that Groupon isn't important, but that's the big one.
Back up at the 175 level, too, so that retracement didn't last too long. The Bears just can't seem to sink their teeth into that one. They just get shrugged off at every opportunity. Interesting to watch how that will play out through earnings. All right, and that, unfortunately, is all the time we have for this episode of the Option Block. Before we go, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. Andrew. What is cooking over there in the land of the pit?
Well, we do have a webinar. Is this public knowledge yet? Our Option Insider webinar?
It's on my website, so it should be public.
We are having a webinar with, the Option Insider Radio Network. Basically, we should retitle it the Doing Stuff webinar. You're going to learn about, how to use options, what we think is in kind of the way that they were designed. So Mark, of course, will talk more about that. Mark Sebastian will be doing a VIX seminar on the 5th of November. You can go to our website and sign up on the events page. That's optionpit.com/events. And also, you'll be doing a butterfly webinar on the 13th of November. So, again, optionpit.com/events, and sign up and learn some stuff.
There you go. As I always like to stay home in your bunny slippers and learn some good stuff.
Yes.
All right, thank you for that, Andrew. If you want to learn more about that webinar that I'll be doing with Andrew and Mark over there, the boys at the Option Pit, then you can find out more at theoptionsinsider.com/events. You have the full rundown there. What we'll be talking about is pretty much a 3-webinar for 1 kind of deal. It should be pretty fun. And even to sweeten the pot a little further, I'm throwing in access to all of the exclusive videos that we produced back at our Unusual Activity Forum back in May. A lot of people have been asking us, hey, can we get access to that footage? What did you guys do? We shot a lot of great stuff. All the panel video, recorded all the panel audio. You can take that with you as well. And, of course, shot a bunch of behind-the-scenes video interviews with a lot of the panelists. So some great stuff. And we've been kind of sitting on it, wondering what to do with it. I think this is the perfect way to reward you guys who want to come in and check out this webinar as well. You get access to all this other great stuff for free. theoptionsinsider.com/events to learn more. All right, speaking of webinars, Uncle Mike, what's coming on the old RCM webinar train?
Wednesday night, we're taking a stop at Obamacare, and a lot going on with that, and we're going to try and dispel myths and bring out facts to the masses. So tune on in, folks. It'll be a lot of fun.
I know this is 2 weeks in a row now you're doing Wednesday. Is it now WNT and not TNT?
No, that's how the schedules worked out. We had Halloween last week, and then the speaker could only do it. The speaker I think he had something going on this Thursday night.
It's hard when you build the day into the branding. You just now you're killing people.
Well, the way I see it, Vince McMahon did TNT He did Tuesday Night Titans, but then they moved it to Friday night. So if it's good enough for Vince McMahon back in the mid-'80s, it's good enough for RCM.
I didn't know that was what that stood for. That's funny.
Yeah.
There we go. So if it's good enough for the former WWF, then you can do it too, sir.
That's right.
Last but certainly not least, Mr. Alex, what's cooking in the land of OX education?
Couple things. Live event is Saturday in Pittsburgh. It's also a virtual event, and one comment I have about Pittsburgh, best homemade pie I ever ate was in Pittsburgh. And when you weigh what I weigh, endorsing homemade pie comes from a level of expertise not had by many folks. Wednesday, one webinar, one a showcase is Bollinger Bands. Also a reminder, $150 Amazon gift card with any new account funded with $1,000 and 10 trades in the first 90 days. So I've squeezed in a gift card and pie in the same session. You're
getting me hungry and you're making me want to shop all at the same time, Alex. I don't know how you do that. I'm still waiting for my gift cards, by the way. I'm sure that package will be coming any day.
I joked the other day about rifling open that drawer, and I got a visit.
They said we counted them all, Alex. So if any are missing, we know it's you and that Longo guy who are going on Amazon.
The guys in suits from Schwab Security. Yep.
Amazon shopping sprees, courtesy of OX. All right. Great stuff, everybody. Of course, if you'd like to make your voices heard on the old show, surf on over to theoptionsinsider.com or find us on Twitter or on Facebook, or just email us the old-fashioned way, questions at theoptionsinsider.com. We love hearing from you guys. Keep it up. And on behalf of Uncle Mike and Andrew and the Viceroy and, of course, myself, I want to thank all of you out there for downloading and streaming and subscribing to the show, and we'll see you next time. Actually, our next show will be a live show, live at least to tape, but live for us all in the same room on Thursday, and we'll see you then right here on The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.